Good evening, ladies and gentlemen. On behalf of Bank of India, I extend a warm welcome to the esteemed members of the press who have joined us today in this auditorium, as well as those who have joined us virtually from different cities across India. We are pleased to announce Bank of India's financial results for Q4 24-25. As you all can see, our esteemed Managing Director, Shri Rajneesh Karnatak ji, has already taken the dais, flanked by Shri Subrat Kumar ji, our Executive Director. May I request Shri P.R. Rajgopal sir to join the dais. And Shri Rajiv Mishra ji also. He was here till recently.
No. See, Rajiv Mishra ji will come after some time. He is in one of the VCs.
Right, sir.
So, Rajgopal ji will come.
Yes, sir. So
Mishra ji will join in some time.
Right, sir. Right. We are about to begin our media briefing. We are having Rajgopal sir also joining the dais. We will now begin this media briefing. To start with, I would like to invite our respected Managing Director, Sir Shri Rajneesh Karnatak ji, to address this gathering, after which we will open the floor for question and answer session. Request you, sir, to... Yeah, please.
Thank you.
So you may continue.
I'll come there.
All right, sir. All right. Thank you, sir.
Thank you, madam. So, ladies and gentlemen, good evening and welcome to today's press meet. As I share with you the financial results of the bank for Q4 FY25 as well as for the full year for the financial year 25. It's my pleasure to welcome each one of you for the interaction. Thank you so much for joining with us. While we continue to brace ourselves for the global trade dynamics, the recent tariff measures and the geopolitical tension comes as a pressure on demand, moderating the consumer sentiments and reversing the market trends. However, IMF growth projections of 6.2% for India's GDP, rising forex reserves, and GST collections and lower inflation give some hope. The shifting of customer bases for traditional to digital natives, easy credit access, digitized financial services, disseminations are few of the many areas which are now defining the prospects. The key focus area of our bank will be enhancing customer experience through all channels and acquisitions of new customers consistently by providing innovative niche products. This will lead to fortification of low-cost deposits, that is CASA, and retail term deposits for sustainable credit growth. My speech would be in 4 parts for the coverage today. The first part being the new initiatives. Star Digital Business Loan, the MSME scheme has been launched. A digital product has been rolled out for the underwriting loans up to rupees 1 crores to MSME borrowers based on GST turnover. A new scheme, Udyami Vanita, has also been introduced for women entrepreneurs with embedded benefits. Star Yuva Udyami, another scheme, has been started to provide loan assistance up to 1 crores to young entrepreneurs of the age group up to 35 years. A green deposit scheme has been introduced for raising green deposits. Funds raised under the scheme will be deployed for financing green projects and assets. Renewable energy has been identified as the champion sector for the bank. As regards IT and cybersecurity, Cybersecurity Center of Excellence has been developed, and this center will foster collaboration, training, and continuous improvement in cyber resilience. Proactive Attack Surface Management, ASM, it identifies unknown vulnerabilities, shadow IT, and misconfigurations before attackers do the same. Centralized Threat Intelligence Platform, it enables automated correlation, real-time alerts, and contextual threat analysis. As part of Project TechSnet, Bank has also opened 24/7 Resiliency Operating Center, which is the ROC, for quick response and recovery from disruptions of bank applications, including CBS, e-platforms, mobile banking app, etc., due to natural disaster, system outages, cyber attacks, etc. The third part of this presentation is with respect to the business. Global business of the bank has grown by 12.02% on a YOY basis from 13.23 lakh crores in March 24 to 14.82 lakh crores as on March 25, with an incremental growth of 1,59,000 crores. Global gross advances have increased by 13.74% from rupees 5.85 lakh crores in March 24 to 6.66 lakh crores in March 25, with an incremental growth of more than 80,000 crores. Global deposits have increased by 10.65% on a YOY basis from 7.37 lakh crores in March 24 to 8.16 lakh crores in March 25, with the incremental growth of 78,000 crore plus. Domestic gross advances have also increased by 14.45% on a YOY basis from 4.92 lakh crores in March 24 to 5.64 lakh crores in March 25. RAM advances of the bank have increased by 18.37% on a YOY basis from 2.73 lakh crores in March 24 to 3.23 lakh crores in March 25, constituting 57% of the advances as on March 25. Domestic deposits have increased by 11.21% on a YOY basis from 6.3 lakh crores in March 24 to 7 lakh crores in March 25. CASA has increased by 2.70 lakh crores in March 24 to 2.80 lakh crores, with an incremental growth of more than 10,000 crores in March 25, and the CASA ratio stood at a healthy 40.28%. The fourth part is with respect to our profitability and the asset quality. Operating profit has improved by 17% on a YOY basis and stood at more than 16,000 crores for FY25, as against 14,069 crores in FY24, and for Q4 FY25 it stood at 4,885 crores, witnessing a YOY growth of 37%. Net profit of the bank has increased by 46% on a YOY basis and stood at 9,219 crores for FY25 as against 6,318 crores in FY24. As on Q4 FY25, it stood at 2,626 crores, witnessing a YOY growth of 82%. Global NIM stood at 2.82% for FY25 as against 2.97% in FY24. Slippage ratio stood at 1.36% in FY25 as against 1.58% in FY24. The slippage ratio stood at 0.32% in Q4 of FY25. Credit cost has improved to 0.76% in FY25 as against 0.78% in FY24. As regards net interest income, it has increased by 6% on a YOY basis and stood at more than 24,000 crores in FY25 as against 23,000 crore plus in FY24. And for Q4 FY25, the net interest income stood at 6,063 crores as against 5,937 crores in Q4 of FY24. Non-interest income of the bank has increased by 48% on a YOY basis and stood at 8,994 crores in FY25 as against 6,095 crores in FY24, and for Q4 FY25 stood at 3,428 crores, witnessing a YOY growth of 96% as against 1,751 crores in Q4 of FY24. As regards the asset quality, there has been improvement in the asset quality with reduction in both gross NPA and net NPA. The gross NPA ratio has improved by 171 basis points on a YOY basis to 3.27% only in FY25 as against the previous figure. Net NPA of the bank ratio of the bank has improved by 40 basis points on a YOY basis to 0.82% only in FY25. The PCR, which is the provision coverage ratio, has improved to 92.39% in March 25 as against 90.59% in March 24. As on 31st March 25, bank CRAR has improved to 17.77% from 16.96% as on March 24. In tune with growth of the global economy, the guidance for global advances will be around 12 to 13%, and the guidance for global deposit growth would be at around 11 to 12% for FY26. The key focus area will be low-cost deposit mobilization for protecting our NIM and increasing high-yielding advances for consistent growth in business with emphasis on digital initiatives, improvement in asset quality, and arresting slippages. The endeavor of the bank will be to increasing efficiency and profitability with focus on compliance and better corporate governance. I would like to thank you all for your continued support. The floor is now open for any discussion and question and answer. Thank you so much. Yeah, should I come there? Yeah.
Thank you very much, sir. Before I can see some anxious hands coming up. Wait. Before we proceed, we would request you to kindly raise your hands for the queries. One of our representatives shall hand over the mic to you. Also, kindly restrict your questions to 2 at a time, allowing other members of the media to interact with the management team. For subsequent questions, we will come back to you later if time permits. Please identify yourself, rather introduce yourselves and your publication before asking a question. And for outstation media representatives who have joined virtually, please send your questions to Adfactors PR representatives, Ms. Kejal Tolia, Ms. Maimuna Dorajiwala, or Ms. Gauri Sultanpuri via message or WhatsApp. So, as sir said, the floor is now open. Can we have the first question from the lady who has raised her hand the very first? Yes. Can you please hand over the mic?
Hi, sir. This is Subhana Sheikh from NDTV Profit. I wanted to ask 2 questions. First is on your corporate loan book. It has increased on a year-on-year basis and sequentially. Wanted to understand where exactly are you seeing, this growth coming from? What is the outlook for the next financial year, especially given, the global uncertainty that we are seeing? And are you also looking at lower-rated corporates? Is what I wanted to ask, and then I'll ask my second question, sir.
Yeah, thank you so much. As regards our corporate loan growth is concerned, if you see our presentation also, which we have put for the public domain, our corporate loan has grown by more than 9%, nearly 10%. So that is the first part. So as regards our guidance for FY26 is concerned, so let me give you one data point with respect to the pipeline which is there in the overall corporate credit. So at the global level, we have a book of around 60,000 crores in the corporate. Which is there, which means that they are sanctions which are yet to be disbursed or in principle approvals given where the proposals are in the pipeline. So 60,000 crores is the pipeline available for the corporate credit, which is around 9% of the total global loan book. So that is the kind of pipeline that we are having. And lot of traction we are getting with respect to corporate loans, specifically to the emerging sectors which are there, whether you say funding of the data centers, whether funding to the warehouses, to the EV market, to the green financing also, which is happening in the power sector. All these avenues we are exploring and trying to maximize our corporate book as much as possible. And as regards your question with respect to whether what kind of rating advances you would be going on. So typically we are going for A rated and above advances, but also we are looking in case of manufacturing concerns, triple B rated advances where COD is there, so that we can maximize our earnings, wherein typically we see that the returns are better, rate of interest is better, it is linked to MCLR. The PPC, the processing charges, the non-fund based charges, which are LCBG charges, and other kinds of forex incomes are much better in such kind of advances.
Sir, I also wanted to ask on your NIM. Your NIM has declined significantly in this quarter. Given there's so much uncertainty, we're expecting more rate cuts this year. A lot of banks have also said that they expect, pressure on NIMs to continue in the first half of this financial year. So any guidance on NIM that if you could provide us?
Yeah, so as regards NIMs are concerned, as you are aware that there has been this interest rate scenario where the repo rate has already come down by 50 basis point. The first cut was there in the month of February by 25 basis point, and the second cut was there in April for another 25 basis point. So with that 50 basis point cut, and if you see are the way the advances are today placed among the all the bank scheduled commercial banks, majority of the advances are linked to the EBLR rates, which are the repo rates. And the moment the Reserve Bank cuts the repo rates, obviously the interest rates of the banks also come down immediately on those repo rate linked advances. So as far as Bank of India is concerned, our MCLR linked advances are around 28 to 29%, and majority of the loans are linked to the external benchmarks. Definitely that has played a role in reducing our NIMs, and if you see in our presentation also, our NIM has come down from 2.97% in FY24 to 2.82% as on March 25. So however, if you see the NIM is 2.61 only, it has come down not to that extent in the Q4, but overall it has come down to 2.82% for the entire year. But the way we are anticipating that there can be further rate cuts and the pricing takes some time. So deposits do take some time to get repriced, and it takes typically 6 to 9 months for the entire deposit portfolio of the term deposits to get repriced. So there is a lag in the repricing of the deposit. So that definitely plays a role in protecting of the NIMs. So to that extent, the pressure on the NIMs will be there, not only for our banks, but all the banks.
But in what range would you see your NIM in this financial year?
So the NIM contraction would be there. So if we are anticipating further rate cuts also as per various market reports which are coming. So a 50 basis point further rate cut may impact the NIM by say around another 20 basis point.
You expect it to remain around 2.6 range?
So yeah, so if the rate cut is there, so then that would be the thing. If there is no rate cut, definitely we would be looking to maintain it at around somewhere we are already at 2.82, so we'll be trying to maintain it at around 2.75%.
Madam, can
One follow-up question. Sir, what percentage of your book is linked to EBLR? You said 28 to 29 is linked to MCLR.
Yeah, MCLR is around 29%. It is there in the presentation. Which page? 54%. Around 53-54% is the EBLR book.
Okay. Thank you so much, sir.
Yeah. I'll again repeat, kindly restrict your questions to 2 because there are many members who are awaiting. Yes, can we have the next question?
Yeah, hello, sir. I am Astha Chopra. I'm from Business Today. Sir, my question is that we all know that retail, agriculture and MSME loans have been strong growth drivers. What specific products or campaigns are fueling this growth, and are there any new focus areas for FY25 or 26?
Yeah, so as far as the RAM advances are concerned, if you see our presentation also, so here if you see agriculture growth, agricultural advances have now touched nearly 98,000 crore with a YOY growth of 16.30%. MSME have grown to now 90,000 crore plus with a growth of YOY more than 18%, and retail advances have grown by more than 19%, and they have already touched 1,33,000 crore. So overall our RAM book now has touched a healthy number of 3,22,000 crores with a YOY growth of 18.37%. So we have put lot of enablers within the bank with respect to the RAM advances, because of which they have been growing over the years. One is the underwriting centers, we have separate underwriting centers for agriculture, for retail, for MSME. There are in around 460 underwriting centers comprising the 3 of them, 150 each for each of these segments. That is the first part. Second part is that we have put lot of resources in form of credit officers in these underwriting centers so that the underwriting improves in the bank and better asset quality is maintained. That is one part, and lot of DSA activities and other kinds of activities also we are doing for marketing of the RAM advances like retail, agriculture and MSME. And apart from that, what we have done in the last year is in a big time is that one of our subsidiary BOI shareholding, now we have got approval from the Reserve Bank to act as a DSA. So we have been employing DSAs in that our subsidiary, and they are sourcing business for us for our RAM centers and the MSME centers for retail and MSME advances. This year we will be rolling them out these DSAs and others for our liability products also, and then finally for the third party products. So overall, with the underwriting centers and also these marketing which is happening for the RAM advances, the portfolio is showing a healthy growth, and we expect this portfolio to continue to grow in this financial year 26 also.
Just the next question, that we can see the pre-CR is improved by 180 basis points. Like, what is the bank's strategy for managing the asset quality going forward?
Yeah, correct. So as regards the asset quality is concerned, we have a two-pronged strategy. First part is with respect to the standard advances. So what we have done is we have opened zonal collection centers. We have 69 zones. So we have 13 FGM offices, below which there are zonal offices. They are 69 in number. In each of the zonal office, there is a zonal collection center who takes care of the collection efficiency in the bank. So the entire SMA portfolio in the bank is monitored through the zonal collection centers, and they take care of the overall SMA book of the bank. So that is the first part. If you see our SMA slide also, 5 crore and above SMA, which we have now reported here, has now come down as low as 5,900 crores, right? So we have come down at 5,900 crores, which is only 0.8% of the entire global loan book of the bank, which was as high as nearly 8,000 crore plus as on March 24. So that kind of efficiency we have got in the collection side, and that is the first part. Second part is that we have already more than 25 ARB branches through which we are managing our entire NPA. So if you see the NPA book of the bank also, these ARBs, we have shifted all NPA accounts which are 50 lakhs and above, and the NPA monitoring and the recovery is now getting dedicated through these ARB branches in the bank, and the normal branches of the bank are now free of doing any of the recovery work. So these ARB branches are now concentrating on the recovery of the accounts, and good recovery, handsome recovery. In fact, you have seen, if you see our slides, we have done total recovery of the accounts, upgradation plus the UCI and URI and the return of recovery. That total amount is aggregating more than 9,000 crores for the bank in this financial year. So we have laid so much emphasis on the recovery and the asset quality part in the bank that SMA we are monitoring very closely, and also the recovery part in the NPA accounts.
Thank you,
so
sir. Madam, I'd request you to please allow the next person to, can we have it from
Hi,
there?
sir, this is Alec.
Okay, sir, you take
Hi.
it. You take it.
Hi, this is Alec from Economic Times. Sir, within the retail book, your personal loan has grown about 30%, though the share remains at 9%. So what gives you comfort growing this book? And second question on, there are reports about preparedness among banks for a potential cybersecurity attack. So any comments on that? What's the advisory from the RBI and the government? Yeah.
Okay, thank you so much. So as regards the personal loan book in the retail, as you said that it has rightly said that it has grown by more than 30%. But this 30% growth is at the backdrop of a low base. So if you see our retail book is 12,670 crores only as on 31st March 25. And if you see the overall personal loan book is 12,670 crore out of the total retail book of 1,33,000 crores. And it is only 9% of the entire retail book. So if I tell you, a lot of guardrails we have already put in the retail book while we are growing it. So 760 is the minimum score at which we are doing the retail, and majority of the retail loans where we are doing is now backed by the cash flows with respect to the salaries in the account, and the EMIs are coming out of the salary accounts. And then the nudge mandates are also there, which are there with the bank. So that is also another guardrail that is there. So predominantly we are trying to give to the salaried customers, and which are backed by the cash flows, their salaries. So that is the guardrail that we have put in our personal loan book. As regards the stress within that book is concerned, so I give you one figure that our NPA is only 136 crore as on 31st March in the personal loan book, and it is only 1.1% of the entire book. Further, if I give you a color on the SMA also in this personal loan book, the SMA 1 and 2 is only 435 crores, which is hardly 3.43% of that book. And if you see the overall personal loan book to the global book, it is hardly 1.80 of the global book.
So given these guardrails, and you've also alluded to the fact that you would look at high yielding advances as strategy to compensate the pressure on NIM, would you then look at stepping up the unsecured book?
No, see, there is no strategy as such for specifically for growing of the unsecured group. Whatever is growth you are seeing in the personal loan book is a normal organic growth which is coming from the branches. See, we have got very many tie-ups with various organizations which are corporates in the private sector. These are central PSUs, these are state PSUs, and these are the employees of these corporate central and state PSUs where we are signing the MOUs, where the salary is coming into the Bank of India saving accounts. There we are giving the personal loan. So lot of checks and balances we have put, lot of guardrails we have put in order to see to it that no delinquency happens and there is no stress in the book. As I already told, the stress is hardly, if you aggregate the NPA number and also the SMA 1 and 2 of the personal loan book, it is around 4% only.
You would be
Thank you.
comfortable growing this book? Would you be comfortable growing this book?
Yeah, we are presently, whatever the guardrails and the kind of delinquency which is there and the asset which is within our threshold level, we are okay with this growth.
Okay. And on
Thank
the
you.
cyber security bit?
Yeah, so bank has taken a lot of initiatives as far as the cyber security and the present threat which is coming with respect to the cyber security. Lot of advisories have come from our regulator, Reserve Bank of India, and also from certain. So whatever the advisories which have come from the RBI or from the regulator, we are adhering to those guidelines, and we have a 24/7 resiliency center operating, and we have already put a BCP in place. We have a 24/7 center, as I told you, and it is working like on a 8-hour shift. And we have put more resources in the last 5-6 days on these things, and the operating of these 24/7 BCP, which is happening at a very senior level at the CTO level, CIO level, CISO level, and they are escalating the matter, if any, immediately to the whole-time directors, like to the executive directors and myself. So we are very much on the job, and total BCP has already been put in place to take care of all these things. Red teaming is also taking place. In fact, deepfakes and other kinds of things we are also getting checked, and other chatters also on the dark web we are getting checked, so that any kind of attack or thing which is coming, we are trying to preempt those kinds of things.
Sir,
Thank you
I'm
very much,
Hamsini
sir.
from, Money
Before-
Control. You just mentioned now that based on RBI guidelines, you're doing this. Has any fresh guidelines been introduced or any fresh communication from the regulator you've heard in since May 6th that you've heightened your security? That's one part I'd like to ask as a clarification from his question, sir. And are you also shoring up a little more on your ATM and cash management front, especially for the borderline states?
Right. So already DFS has also given us an advisory with respect to cash management.
When did the advisory come, sir? Just as a
When
this
did-
advisory, when did it exactly come?
It
When
ca-
did DFS give it to you? Today?
No, it has come in this week only.
Okay.
It has come in this week only. This is with respect to keeping adequate cash in the ATMs, number one, and also keeping adequate cash in the branches. This is with respect to that. That is the advisory. And with respect to the specific cyber security inputs which are coming, they are coming especially from the RBI also, and also, as I said, specifically from the agency which is the certain agency, nodal agency of the government.
Okay. So my questions with respect to Q4 performance. One, I'll start with the guidance that you gave, sir. You said advances, you're expecting a growth of 11 to 12%. Is that after factoring for all the uncertainties? There has been a lot of escalation across the border. We expect further escalation. Have you factored in all of that? I'm asking this question particularly with respect to the fact that there is tariff war also which is being played outside of India. Global, I mean, overseas business is an important one for you. So you've taken in all of that and you're still giving a guidance of 11 to 12%.
So as on date when the situation is, we are giving a global guidance of credit of 11 to 12%. It is also coming from the fact that IMF has also given that the Indian economy on the GDP side would be growing at around 6.2%. So typically as a banker, when you get those kinds of information from RBI, IMF and other agencies, what is the GDP growth in the country? Normally, typically the credit growth is twice of that. So 6.2 into 2, if you do, the credit growth should be at around 12.4%. So that is the benchmark ballpark number which is there. So 11 to 12% we are trying to say that would be the guidance, keeping in view these factors. But the kind of situation which is emerging now across the border, so even in future, if anything more adverse happens, we'll take a look on that.
The
Thank-
other question is with respect to your slippages, sir. For most of the public sector banks, including the largest one, we've seen the slippages ratio slip to below 1%.
Correct.
Union Bank is also now at 0.8, whereas Bank of India, it's still much above 1%. So what is your plan to get your overall slippages down? Should we expect to see more of sale to ARC and things like that, secondaries like that, so that your the balance sheet cleanup can be accelerated a little more?
Yeah. So as regards slippage is concerned, so slippage ratio is coming out of the fresh slippages which are happening in the bank, right? So in that, if you see, our slippage ratio was 1.58 in March 24. It has now improved to 1.36 slippage ratio. But I fully agree with your point that most of the banks which are having a healthy balance sheet, their slippage ratio has come down below 1%. So we are also targeting that, but in this year, financial year, I can say that there was one big account, public sector account, which was there, which was 1,000 crore. It was a account which was there in the system. Other banks were also having it, and we were also having it. Had it not been there, though, our slippage would have been well below 1% slippage ratio. So because of that, it has now, we could finally close at 1.38%, but we are very much on top of that, and we are expecting that this year the slippage ratio would be much better and closer to 1%.
Some of the
Madam,
banks
we'll
have
come
guided
back
for
to you
recoveries
later.
from the account that you've mentioned, sir. Are you factoring that also in your calculations? The account that you mentioned, which has turned slippage, the
Calculation,
PSC,
no, that is also already part of
no,
the
for
slippage
going
ratio.
forward, FY26, I meant.
For the recovery,
On recoveries, a few other of your peer banks have also said that they're expecting some upgradations recoveries from that entity. So what is your view on that, sir?
yeah,
Thank
so we are expecting some resolution to happen in that account. And the talks are in advanced stage. It being a central PSU account, obviously the government is also involved in that. So in this financial year, we are certainly positive about that. Some resolution will be coming in this account.
Thank you very much. Kindly restrict yourself to 2 questions, please. There are many members waiting. If you all could allow me to speak, let me welcome our Executive Director, Shri Rajiv Mishra ji, who has just joined us. May I invite Mr. Amol from ET to put a question? You have been waiting since long, sir. Mr. Amol. No, he is at the front. Yeah.
Thank you. So margin, just wanted more clarification on that part. Is this the new normal for the industry, that the margin is going to be 3% or less than 3%, considering that rates will be reduced this year? That is one clarification I wanted you to give us. And more importantly, when we specifically say that the low cost deposits, what are you going to do, to mobilize the low cost deposits? Are you going to focus more on the government agencies, the municipalities and the state corporations, because retails are finding different ways? That is my first question. And second is, in the beginning, you mentioned, sir, that you are focusing a lot on MSME and launching new products there. And the limit for a digital loan is 1 CR. Did I hear it correct? I mean, 1 crore is the limit on the digital loan for the MSMEs?
Yes.
And the question there, sir, is what makes you confident to go aggressive on MSME and specifically that kind of segment where the industry is actually bleeding?
Yeah. So as regards the margin point is concerned, see, margin already is, as you know, that it has come down to 2.82%, and I have said that there will be more pressure in the margins with anticipated rate cut from RBI on the repo rate side. So this year I feel that for all the banks, margins will be pressure. So net interest income and the net interest margins will be pressure, and the overall profitability of the banks will be that where we are able to get more non-interest income and where we are able to get more recoveries from the NPA. So FY25 will be good for those banks who are able to get more non-interest income and more recoveries in their NPA book. So that is one thing which is there. Apart from that, the second question is with respect, your question is with respect to your deposits. In deposits, as you see for our balance sheet, our bulk deposit is only 13.82%, which is less than 14%. So what does it mean is that 86% of our domestic deposits are either retail term deposits or they are the CASA deposits. So that is one of the best percentages among the public sector banks. So we are the best among that as far as that is concerned. And CASA ratio also, if you see, we are at above 40%. So that is also a very healthy number. And if you see the growth in CASA also, in the absolute terms, we have grown CASA by nearly 10,000 crores on a YOY basis. So that is another number, and we are definitely strategizing low cost deposits, as you rightly said. Lot of strategies we have already put in place for improving these CASA numbers and also retail term deposits. We have already identified 1,000 branches as our HNI branches, wherein we are treating a HNI customer who has an average quarterly balance of 5 lakh and above. So that is the kind of numbers we have placed RMs over there in the branches. And then we have also placed branches in our zonal offices, our 16 zonal offices and the 13 FGM offices. Our resources officers, senior resources officers who are at the chief manager level or the senior manager level, who are now coordinating, being the nodal persons for the entire branches, 50, 60, whatever the number of branches are there in that zone, for coordinating in having fresh deposits, fresh retail term deposits, fresh saving accounts and fresh current accounts. That is the other strategy that we have done. The next thing that we have done in this financial year FY25, we have already opened 211 branches. So these branches we have opened for mobilizing CASA, retail term deposits, and also for RAM advances, retail, agriculture and MSME advances. This year again in FY26 we will be opening 200 branches pan India. So that is another part of the strategy for garnering CASA, retail term deposits and RAM advances. And then we have done a lot of product changes which we have done, and we have launched certain new products. Apart from that, we have done lot of MOUs and tie-ups with central PSUs and state PSUs for their not only their nodal account but also salary account of their staffs, wherein not only the salary staff of saving we are getting, and we are giving them customized loan products of personal loan, because the salary is coming into the Bank of India accounts. So all these things taken together, our focus will be to improve our low cost deposits so that we are able to reduce our cost of deposit, so that we are able to protect our margins in the long run, which are under pressure. Yeah. As regards the MSME is concerned, again the MSME books is, as I said, is growing at a very healthy rate. Digital product, as I said, up to 1 crore we have already launched. Lot of guardrails again we have put in that digital product, while it will go through the flow of the sanction and finally the disbursal. Apart from that, as per the CGT MSE guideline, it will be getting covered under the CGT MSE cover also.
The question is not that. Basically what happened is, the ticket size between 15 lakh to 1 crore is very lucrative. So if the kind of institutions that are getting into are the low ticket size, 50,000, less than 50,000, less than 1 lakh, there is a lot of stress. But the stress in 15 lakhs to 1 crore is not much. So most of the small industries is good. Small enterprises, to be very precise, both services as well as the manufacturing. If you look at our services, lending to services is around 46%. So there is a good potential there, provided you have a good scorecard, you have good underwriting standard and all that. So there will not be any problem in terms of stress over there, industry-wise also. So that is the reason why we are okay with that segment. Okay?
Thank you very much, sir. Thank you very much, sir. Can we have a question from that side?
Hi, sir. I'm Sachi Pandey from Informist. Your recoveries are up almost 3 times in the quarter. Can you please tell which sectors are these from, and should we expect the trend to continue?
Yeah, as regards our recoveries are concerned. Yeah. So as regards our recoveries are concerned, you rightly said that during the quarter the recoveries have been quite good. There were a couple of lumpy accounts over there, frankly speaking, in this quarter. So that constituted the total recovery during the quarter for us.
Okay, one more question. Your yield on advances have fallen to 8.27% from 8.55% from last quarter. Where do you expect that to bottom out?
So this is the yield on advances, no? Yeah. So yield on advances from 8.38, in fact, they have improved if you see on a YOY basis, on the 12 months basis. So yield on advances, which was 8.38% in FY24, it has improved to 8.46% in FY25. However, you are right that for the quarter ended March 25, it has come down to 8.27%, but we are very cognizant of this fact that we need to improve our yield on advances. So we are trying to, as much as possible for corporate advances, go for MCLR linked advances, where the impact of the reduction in repo rate from RBI would not be there immediately. So that is one part. Another data that I would like to share with you, that our weighted average lending rate is 9.74%. And our weighted average term deposit rate which we have taken is 7.09%. So over there we have a healthy margin of 2.65%. So that is we are trying to maintain, and that is why we are trying to garner as much as retail term deposits, so that the cost of weighted average rate of deposits is on a lower side, and we are able to protect our margins.
Okay. Also, can you please explain the near 50 bips increase in credit cost and which sectors are seeing most amount of stress?
So credit cost, if you see credit cost, in fact, has come down from 0.78 to 0.76. It has come down by 2 basis point on a YOY basis. But yes, on credit cost in Q4 went up from 0.39 in December to 0.84 in March 25. That is correct. So sectors were basically there were certain delinquencies which happened in MSME and also in agriculture. In agriculture, the delinquencies were because of some changes in the guidelines by the SLBCs, local state SLBCs, because of which some of the accounts in agriculture had slipped into NPA.
Okay. Thank you very much, ma'am. Can we have questions?
Yeah, you wanted to update on the interest.
That yield on advances, na? So we are going to have 20 more, around 20 branches operating in the mid-corporate segment. So this is going to kick in this current fiscal. So which is going to add, a kicker to the yield on advances. That will further
Thank
add.
you, sir.
Thank you.
Yes. Someone from this end. This area has not. We'll come back to you, ma'am, definitely. Madam, any questions from you?
So can you talk about the women entrepreneurship program which you are funding?
Yeah. So Rajgopal ji.
Can give
We have actually floated a special product which is called Udyami Vanita. Udyami Vanita, only for women enterprises. There is a good pickup over there. Of course, readily I don't have the numbers. The good traction that we have got in terms of outstanding numbers and the number of sanctions that we have done there. There is a huge interest in that particular product that we are doing. So that is on the asset side, that is on the loan side, entrepreneur side. On the liability side, we have special products for called Nari Shakti, and all those products are there anyway, which have been there. We continue to do that. So we are very, very upbeat about that Yuva Vanita product, which has seen a very good pickup across the country. Okay.
Good evening. This is Abhijit Lili from Business Standard. With regard to the recoveries and upgradations, what is the guidance that you're giving for FY26?
As far as the recoveries and upgradations are concerned, see, at this moment we are not giving any guidance apart from the top lines because of the situation which is there, presently emerging situation which is there. So only the top line guidance we are giving at present. So any of the ratio guidance and other guidance we are not giving at this juncture, because we feel that let the situation get cleared, and then only we'll be able to further give clear guidance on these numbers. So though if I can just give you a flavor of what the slippages and recovery has been. So slippage for last year it was 7,551 crores in FY24, which are the numbers there in the slide. This year it is 7,588 at the real to that number only, because of one of the reason was, as I said, that one of the large PSU account which was there. Recovery we have done very well, in fact. Recoveries as against last year 7,882 crore of recovery. This year we have done recovery of 9,586 crores. So that has been the kind of recovery, because of which obviously the other ratios have also improved for us. Yeah.
You have done in this quarter and entire year?
Yeah, so write-off, in fact, the write-offs are less in this financial year. If I give you the numbers, write-off in FY24 was 9,749. In this financial year, FY25, the write-off is only 7,756. In fact, it is less by nearly 2,000 crores.
Thank you
And
very
in spite
much.
of that, we were able to bring down our gross and net NPS.
Thank you very much. Can we have the question from this young lady sitting there? Yeah.
Thank you. Good evening, sir. This is Shrishti Sharma from ETBFSI. I am curious to know what is your exposure to co-lending, if you could quantify the loan book. And given the RBI drafts on co-lending recently, going beyond priority sector, now that there is more opportunity, do you see yourself accelerating yourself in this segment? And if not, what's the reason behind? And second question, on the personnel hiring, what do you, how much of personnel hiring do you plan to do in FY26?
Personal?
Personnel hiring, staff hiring.
Hiring, you mean to say?
Yeah.
Hiring.
Acha, staff
Hiring,
hike.
sir.
Okay, personal hike, staff hike. Okay. So as regards the co-lending and this pool purchase is concerned, RBI guidelines, recently we have got the guidelines. So if I tell you the number, our book is at around, a very small book of around 5,700 crores, not much book is there. So, but we are very much positive about this book. And lot of tie-ups we have done with various NBFCs. Already more than 15 tie-ups are there presently in this book. In the pipeline, if I would give you the pipeline would be at around 5 to 6,000 crores. So 5,700 crores is the outstanding and around 5 to 6,000 crore is the present pipeline. And we are in talks with many NBFCs for increasing this book both on the pool side and also on the co-lending side. So that is as far as that is concerned. As regards the personal expenses and personal thing is concerned, see, public sector banks are all guided by the bipartite settlement and the joint note for the officers that has already been executed last year. So now the next round of that would be happening in, I think, 2027. Rajgopalji?
Yeah.
27. So there will not be any increase because it's a structured way it goes through the IBA and the government being a public sector bank.
Thank you very much, sir.
So at this moment, as I said, we are not giving any guidance apart from the top line. Yeah, thank you.
Yeah, someone.
Hi, sir. Manish Suwana here from Money Control. So most PSU banks have reported a healthy treasury income in this quarter, and they are optimistic about the coming quarter as well. And given the uncertainties, what is going on around, what is your take on it? And my second question is on your capital raising plan, because your investor presentation mentions that you have raised around 2,500 crore tier 2 bonds in FY25. How much you are planning to raise in FY26, either through tier 1 bond or tier 2 bonds?
Yeah, so as regards our treasury part is concerned, so we have developed a very good book in the last 3-4 quarters as far as our book is concerned in the treasury when the interest rates were high, and now that the interest rates are coming down, repo rate from RBI has come down by nearly 50 basis points. Further expectation is there, and we have made, as you see our presentation of non-interest income, we have made good income over there also. From 628 crores, this income has gone up to 1800 crores from profit for sale and revaluation of the investments. So that is that part of that, and we are expecting some good gains from there also, because we are expecting that further rate cuts may be happening. That is one part. The other part was with respect to you are asking about?
Capital raising plans.
Capital raising. So, yeah. So capital raising, we have a board approval of raising 5,000 crores of tier 1 and tier 2 bonds. So that is the only capital raising presently we are planning. See, already we have a capital adequacy ratio of 17.77%, which is well above the threshold level. So presently we do not require any capital as such, and there are no plans of coming out of a QIP also at present. So the only board approval that we have is for raising tier 1 and tier 2 of rupees 5,000 crores. Both combined together, yeah.
And so one.
Yeah. So infra bonds, last year we have raised more than 12,000 crores of infra bonds. As on date, we do not have any approval for infra bonds, but definitely as the market improves, definitely we will be tapping the market also for infra bonds.
Thank you, sir. Yes, the
So
lady
one more
from
question
back.
I have on the corporate pricing because you said ki you will focus on the corporate loans which are MCLR linked, whereas some other PSU banks are saying that they will let go of some MCLR linked loans just to protect the margin. So means what gives you comfort to stick to it and going with the MCLR linked corporate loans?
See, if you see the structure of MCLR and the external benchmark loans, so it is always advisable for the bank to be in the MCLR book. Because if you see our bank MCLR, our 1 year MCLR is 9.15% and our overnight MCLR is 8.20%. So MCLR rate of interest, the yield on the MCLR book is always better than the yield on the external benchmark. So I do not know how other banks are saying, but as a banker I can clearly say that if you are in the MCLR book, your yields are much better and they are more protected, because RBI formula is such that it takes care of the cost of deposits while the rate of the MCLR is getting fixed. So definitely we as a bank, we are very clear with our strategy to improve our MCLR book. For that, as our ED Subratji has already said, that we have also opened emerging corporate branches from where we want to lend to corporates which are up to 100 to 50 crores, which are typically MCLR linked advances, where the yields are better and they are linked to the MCLR.
Sir, but most of the
Thank
banks
you.
are saying...
Madam, you have asked many questions.
One just follow up, sir. Most of the banks are saying that they're facing a lot of pricing competition on corporate book, and you saying you're focusing more on A and above rated companies, but your competition is saying that they're letting go of a lot of contracts there. What is, how are you defending pricing,
So
sir?
that is what is answering your question, madam. See, when we are saying that there is a lot of pricing pressure in the MCLR book, that pricing is on the external benchmark to the gilt, GSEC linked, repo linked and T-bill linked external advances, which are typically taken by AAA and AA rated corporates. That is where the pressure is. The pressure is not on the MCLR. So wherever the lending is on MCLR, typically those are long-term project loans which stay with the bank.
Yes. You have to switch it on, madam.
Hi, this is Anjali Palot from ET Now. My question is on the low-cost deposit mobilization that you've mentioned.
Yeah.
Your CASA ratio has come down sequentially and on a year-on-year basis. So what's a comfortable CASA ratio that you're looking at with this mobilization? And other than the branch expansion, are there other strategies that you'll be using to get more CASA deposits?
Yeah, so as you rightly observed that our CASA has come on a YOY basis, percentage terms it has come down from 43% to 40%. See, with the challenge which is there with in respect to resources in the system for all scheduled commercial banks, so definitely this is one thing which is playing out. So as regards what we will be comfortable is that we would like to maintain our CASA percentage at 40% at for the financial year 26 also. So we will be growing this year also, as I said, whatever the guidance we have given on the top line of advances and the deposit side. So we will be growing our deposit, but we will try to maintain our CASA at 40% plus, and also maintain our bulk deposits at within 14%. So that what would happen is that over the entire domestic deposits, 86% of our domestic deposit would be either CASA or retail term deposit, which will bring down our cost of deposit.
All right, and on the digital businesses, you've said that you will be going forward, there will be an emphasis on digital businesses. Could you give more details on what segments within that are you targeting and what kind of investments are planned for that?
Yeah. So as regards our digital book is concerned, as on FY25, our total digital book is around 80,000 crores out of our total global book of 6,66,000 crores. That is around 12% of our total global loan book. Within that, if I give you retail, MSME and agriculture, retail book is around 27. So this digital journeys are both the web-based journeys and direct digital journeys. So retail book is around 27,000 crores. Agriculture book through digital is around 39,000 crores. And MSME is also 13,000 crores. That also includes the gold loans which we are sanctioning through the digital platform. So that also includes that. As regards which are the products which we have already given in the presentation. So presently 29 products are there on the digital journey, which is already there in the page 39 of our slide. 29 products. Out of those 29 products, 5 products are with respect to the liability products, and the remaining 24 products are with respect to the loan products, whether it is retail, MSME and agriculture. So they are across the board, whether it is in the agriculture, the Kisan credit card, the dairy products which are there, gold loan, KCC crop loan which is digital, Krishi Vahan, self-help groups. In the retail also the education loan, loan against property, pension loan, personal loan, and solar rooftop loan is also digital. Star doctor loan also is digital now. Home loan is also digital. The entire sanctioning part up to the sanctioning part, obviously after the sanction the mortgage has to happen physically at the branch level by the title deed, and the top up loan is also digital. Vehicle loan for us is also digital. In MSME also there are 8 products which are digital now. So all these taken together, our book, digital book, as I said, is already touched 80,000 crores.
So I just want to know, are there, within all of the ones that you mentioned, are there some that you're going to focus on more going forward, especially in the digital space?
So digital we are definitely focusing because it is automated process, and the kind of investment that we have made in technology, whether it is IT, whether it is digital or cyber security, we want to go more on digital because it frees our branches from all these kind of routine works. So we want to build operational efficiencies through digital sanctions. So that is where we are concentrating on.
Thank you very much. Can we have just one last question because we are running out of time? Ma'am, you have already asked. Let me give the chance to the gentleman raising the hand there. Please pass on the mic, please.
Sir,
yeah.
Ramesh Pojwani from Mehta and Vakil. First and foremost, your presentation shows a quantum jump in your performance. You have excelled on several parameters, but going through the presentation further, I would like your honest and specific comments on the status of the gross NPAs, which are 21,149 crores, split into 3 parts. So your only observation on that, 1. 2, going forward, are we seeing a worsening of a situation because you have not made any additional provisions like other banks have done and reported? You have maintained the provisions at a base level which you have always been doing. So are you seeing the situation stabilizing here, improving, or is there a cause for further worsening?
Yeah. So as far as our gross NPAs are concerned, see, our gross NPA was in FY24 at a number 4.98%, which we have now improved to a number of 3.27% as on FY25. So in December, in projection we were at 3.60%. In the guidance last year we gave 3.6, and finally we have been able to keep it at 3.27%. So that is the kind of improvement we have done with our gross NPA through our recovery. As I said, that more than 9,000 crore of recovery as we have done. So as regards the slippage and the kind of thing which we are seeing in the future, at present it is too early to say anything. We don't foresee anything which is there, and the way the tariffs are also happening, slowly what we are seeing from the reports is bilaterally USA is trying to cut off a deal with each of the countries and solving the issues. So slowly and steadily I think the things should normalize and we should be into the normal course of business.
That's wonderful to hear. And one more aspect, every bank like yours has a recovery from the written off accounts.
Right.
So which adds straight away to your bottom line, to the PAT. How has been the recovery from the written off for the year ending FY25, and going forward, how do you see that scenario playing out?
Yeah. So as far as the recovery from written off account is there, which is already there in our presentation, there we have informed that how much is it, Mishra ji? No, from non-interest income it is there, no? I'll just give you the number. Slide number 19, sir. Yeah, this 19. Is there. Slide number 19. So in the recovery from written off accounts, it is part of our non-interest income. It has improved from 1,467 crores in March 24 to 2,365 crores. It is a jump of nearly 61%. So as a strategy, we have OTS scheme also in the bank, which is specifically for written off accounts. So that is what we have given to our field functionaries. There we are seeing lot of traction. And as I said that the increase has been 61% on a YOY basis from recovery from written off accounts.
Thank you very much. Thank you very much.
Will we improve recovery in this to this figure also going forward?
Yes, yes. This year also our focus will be on recovery from return of accounts. We have a good book in that, and as I said that we already have a scheme within the bank for that, and we are monitoring and targeting that recovery from such portfolio.
Thank you and all.
Thank you, Motwani ji. And thank you very much for all the members of the press for joining us this evening. I also would like to thank Shri Rajneesh Karnatak ji, our Managing Director, and Bank of India management team. We will now conclude this gathering, and our team will share the press release with you shortly. And AdFactors PR team will be available to assist with any further queries. Thank you, gentlemen, and thank you, ladies. Thank you, sir. Shortly, we'll be commencing with the analyst meet after a short Gauri, we would like to begin. We would like to begin. Kindly ask all the analysts who have joined, who are waiting outside, to please come in. Can we, yes, can we have the music shut down, please? Good evening, ladies and gentlemen. On behalf of Bank of India, I extend a warm welcome to all the esteemed analysts who have joined us today in this auditorium, as well as those who have joined virtually from different cities across India. We are pleased to announce Bank of India's financial results for Q4 FY25. As you all can see, our top management, represented by our Managing Director, Shri Rajneesh Karnatak ji, and all our executive directors, Shri P.R. Rajgopal, Shri Subrat Kumar, and Shri Rajiv Mishra, all have joined the stage. Thank you all, gentlemen, for joining us. We will now begin this analyst briefing. To start with, I'd like to invite Shri Rajneesh Karnatak ji, our MD sir, to please address this gathering, after which we will be taking on the question answer session. Thank you. Thank you, sir.
Thank you, madam. Ladies and gentlemen, good evening and welcome to today's analyst meet, both physically and virtually. I am told that there are certain analysts who are there virtually also, correct, madam? Virtually also some are there, no? Yeah. As I share with you the financial results of the bank for Q4 FY25 as well as for the full year FY 2025, it is my pleasure to welcome each one of you for the interaction today. Thank you for joining us in spite of your busy schedules. While we continue to brace ourselves for the global trade dynamics and the recent tariff measures and the geopolitical tension comes as a pressure on demand, moderating consumer sentiments and reversing market trends. However, IMF growth projections of 6.2% and India's GDP, rising forex reserves, record GST collections and lower inflations have given hope. The shifting of customer bases from traditional to digital natives, easy credit access, digitized financial services dissemination are few of the many areas which are now defining the prospects. The key focus area of our bank will be enhancing customer experience through all channels and acquisitions of new customers consistently by providing innovative and niche services. This will lead to fortification of low-cost deposits like CASA, retail term deposits, for sustainable credit growth. My speech would be in 4 parts for this coverage today. The first part being the new initiatives that the bank has taken over the last quarter. So we have started the Star Digital Business Loan for the MSME schemes, a digital product which has been rolled out for underwriting loans up to rupees 1 crore in MSME space for borrowers based on the GST turnover. The second is a new scheme, Udyami Vanita, has been introduced for women entrepreneurs with embedded benefits. The third is the Star Yuva Udyami, which is a scheme which has been started to provide loan assistance up to rupees 1 crore for young entrepreneurs for age up to 35 years. Green deposit scheme has also been introduced for raising green deposit funds under the scheme, which will be deployed for financing of green assets. Renewable energy has also been identified as a champion sector within the bank. The second part is with respect to the IT and cybersecurity. Cybersecurity Center of Excellence, we have developed the center to foster collaboration, training and continuous improvement in cyber resilience. Proactive attack surface management, which is the ASM, has also been done up. It identifies unknown vulnerabilities, shadow IT and misconfigurations before attackers do so. Centralized threat intelligence platform also has been set up. It enables automated correlation, real-time alerts and contextual threat analysis. As part of our TechSnet, bank has opened 24/7 Resiliency Operating Center, which is the ROC, for quick response and recovery from disruptions of bank applications, including the CBS platform, e-platform, mobile banking applications, etc., due to natural disasters, system outages, cyber attacks, etc. The third part is with respect to business. Here, global business of the bank has grown by 12.02% on a YOY basis from 13.23 lakh crores in March 24 to 14.82 lakh crores in March 25 with the incremental growth of nearly 1,59,000 crores. Global advances of the bank have increased by 13.74% on a YOY basis from rupees 5.85 lakh crores in March 24 to 6,66,000 crores in March 25 with an incremental growth of more than 80,000 crores. Global deposits, they have increased by 10.65% on a YOY basis from 7,37,000 crores in March 24 to 8,16,000 crores in March 25 with an incremental growth of 78,000 crore plus. Domestic gross advances have increased by 14.45% on a YOY basis from 4.92 lakh crores in March 24 to 5.64 lakh crores in March 25. RAM advances have increased by a good number of 18.37% on a YOY basis from 2.73 lakh crores in March 24 to 3.23 lakh crores in March 25, constituting 57% of our total advance book of the bank. Domestic advances have increased by 11.21% on a YOY basis from 6.30 lakh crores in March 24 to 7 lakh crores in March 25. Our CASA has increased on a YOY basis from 2.70 lakh crores in March 24 to 2.80 lakh crores in March 25 with an incremental growth of more than 10,000 crores in March 25, and the CASA ratio stood at a healthy number of more than 40%. Now, with respect to profitability and asset quality, our operating profit has improved by 17% on a YOY basis and stood at more than 16,000 crores in FY25 as against 14,000 crore plus as on FY24, and in Q4 of FY25 it stood at 4,885 crores, witnessing a YOY growth of 37%. Net profit has increased by 46% on a YOY basis and stood at 9,219 crores for FY25 against 6,318 crores in FY24, and for Q4 FY25 it was at 2,626 crores, witnessing a growth of nearly 82% in the net profit. Global NIM of the bank is now at 2.82% as against 2.97% in FY24. Slippage ratio stood at 1.36% in FY25 as against 1.58% in FY24. Slippage ratio was at 0.32% in Q4 of FY25. Credit cost has improved to 0.76% in FY25 as against 0.78% in FY24. Net interest income has increased by 6% on a YOY basis and stood at 24,000 crore plus in FY25 as against 23,000 crore plus in FY24. In Q5, the NII stood at 6,063 crores as against 5,937 crore in Q4 of FY24. As regards the non-interest income is concerned, it has increased by 48% on a YOY basis and stood at 8,994 crores in FY25 as against 6,095 crores in FY24, and for Q4 FY25 stood at 3,400 crore plus, witnessing a YOY growth of nearly 96% as against 1,700 crores in Q4 of the last financial year. There has also been improvement in the asset quality in the bank in both gross NPA ratio and also the net NPA ratio. Gross NPA ratio has improved by 171 basis points to 3.27% in FY25, and net NPA ratio has improved by 40 basis points on a YOY basis to 0.82% only in FY25. As regards the PCR is there, the provision coverage ratio, it has improved by 92 to 92.39% in FY25 as against 90.59%. As on March 25, bank CRAR has improved to 17.77% as against 16.96% in March 24. In tune with the growth of the global economy, the guidance for global advances growth will be at around 12 to 13%. The global deposit growth would be at around 11 to 12% for FY26. The key focus area will remain low-cost deposit mobilization for protecting our NIM and increasing high-yielding advances for consistent growth in business with emphasis on digital initiatives, improvement in the asset quality, and arresting the fresh slippages. The endeavor of the bank will be in increasing efficiency and profitability, along with focus on compliance and better corporate governance. I would like to thank you all for your continued support. The floor is now open for discussions and question and answers. Thank you so much.
Thank you very much, sir. We would like to proceed towards our question and answer session. The instructions part, that is mandatory. Before we proceed, we would request you to kindly raise hands for the queries. One of our representatives shall hand over a mic to you. Also kindly restrict questions to 2 at a time, allowing everyone to interact. For subsequent questions, we'll come back to you later if time permits. Please introduce yourself, your organization before asking a question. For outstation analysts, that are those who have joined virtually, please send in your questions to our AdFactors team. Yes, Ajmera ji, kindly begin. Yeah, someone to pass on the mic, please.
Because I thought first is always a compliment, so let the mic be there, otherwise it may not be heard to everyone.
You're always heard, sir.
Compliments to you, sir, for a fantastic set of numbers and really a very good results, because even in this difficult times where there was a pressure on both deposit and credit side to most of the other banks, you have performed much better and maintained your guidance, what you had given, rather a little more on some of the fronts. I mean, if you talk about the asset growth side, I mean the credit side, you talk about the profitability side, everywhere the performance is fantastic. Having said that, I got just some data point and some clarifications so as to now assess properly what is going to happen in FY26. So sir, one is that on the this thing on the credit side, credit growth, our personal loan has been quite good. I mean, though in percentage terms it may be small. So now with this, so many checks and balances coming on the personal loans, what are your plans and what kind of loans do we have? I mean, and what is the delinquency ratio on that personal loan book of 12,000, I think 670. So this is just on this. And similarly on the NBFC front, also as compared to the last quarter, we have grown by 6,000 crores. So they are also, whether they are all AAA, AA rated, or we are moving down towards A or maybe BBB. BBB, I think not there much. So on that, and then on the profitability front, in order to assess the consistency, how much profit has accrued because of the revaluation of NARCL SRs, which now is permitted to be valued at the fair market value. So because that may not be available to us in the current quarter or maybe next quarter, that is something how much has been added to the profit. And then overall on the other income side, I think it has grown, it is almost doubled from 1,747 to 3,428 crore in this quarter. So whether this momentum is going to be maintained, like on the recovery from written off accounts is 1,143 as against 391 crore in the last quarter. Similarly, profit on the sale of the and revaluation of the investment coming to 711 crore as against 266 crore. So of course, investment book of every bank is doing well, but going forward and with this further 2 rate cuts which are expected, I think we should have a bumper profit. How much is going to be added to the bottom line is some light if you can throw on that. And the last is on the, in this round, is on the, I mean, we are just, whisker away from 15 lakh crore business. I think it may be even achieved in this April-June quarter also. So how much is the technology upgradation is, can be attributed to this growth, and how far we have reached on our various models or delivery models on technology, and what kind of budget still do we have for that, for further improvement and upgradation. So some color on the technology side, sir. And if time permits, some information on the recovery as I had asked. Thank you, sir.
Thank you so much, Ajmera ji. आपने तो 5 questions you have asked, so most of the things are covered in the presentation now. Once I answer them. So as regards the personal loan book is concerned, you are right that the growth is more than 30%, which you see over here. But I would just like to clarify and give some data points on the personal loan book. One thing is, as I said last time also in the last analyst presentation, that lot of guardrails we have already placed in the personal loan book, where the CIC score is more than 760, where we are giving only to salaried customer, where we are also ensuring that the salary is coming into the Bank of India saving account. Those kinds of guardrails we have already placed in such kind of loaning when we are doing that. With respect to the book is concerned, overall, as you know, the growth is 30%, right, as you rightly observed, but the base is low, because of which the growth is also showing as at 30%. So our outstanding is only 12,000 crore plus. If you see the entire retail book of the bank, it is 1,33,000 crore, and the personal loan book is only 9% of that book, which is less than 10%. That is one point. Second thing is that our global loan book is 6,66,000 crore as on March 25. If you see the personal loan book, out of that, it is less than 1%. In fact, it is around it is at 1.8%, less than 2%. Now, if you see the stress within that, our NPA in the personal loan book as on 31st March is only 136 crore, which is only 1.10% of the personal loan book. So that is the kind of NPA which is there. Further, if I give you the color on the SMA number also within the personal loan book, SMA 1, 2, both aggregate is only 435 crore, which in percentage terms of this book is only 3.43%. So in a way, our personal loan book is behaving very healthy. The yield is also very good. The asset quality is also, as on date, is good, and we are comfortable with the growth, present growth, which is happening in the personal loan book. Now coming to the next point, which is the NBFC book. Again, as you rightly said that we have increased our portfolio. So our NBFC book, which was 78,000 crore plus as on March 24, has increased to 88,000 crore as on March 25 as per the presentation. So let me clarify with one data point. This 88,000 crore constitutes 3 components. One is the domestic NBFC book, which is 71,000 crore. Then there is international NBFC book, which is 9,600 crores. And then there is a treasury book of NBFC, which is 7,600 crores, contributing total 88,000 crores. And this NBFC book is constituting only 13% of our global book, wherein our global advances are 6,66,000 crores. And if I give you the color on the rating part of this entire NBFC 88,000 crore book, so A rated and above accounts constitute 98% of the outstanding. 98% of the outstanding. So that is the color. The second thing that I would like to give on the NBFC book is, with respect to, it is there in the presentation also, which is respect to the PSU and the bank-backed NBFCs like PNB Housing Finance or LIC Housing Finance or CAN Housing Finance, that kind of thing. Here if you see the total PSU and the bank-backed NBFCs, total exposure is 51%. Which means that only 49% of our NBFC book is to the actual NBFCs, remaining is either to the PSU NBFCs or the bank-backed NBFCs. So that kind of security and comfort level available is there with the bank as far as the NBFC is concerned. Now with respect to the profitability that we have taken due to the RBI circular on the NARCL, that figure is at around, Mishra ji, 350 crores.
Yeah,
How much is that? 350 crore.
400 crore.
How much it is, Kumar? 400 crores. We have given in that. Okay.
398.
So, Kumar, if you can say it on the mic for everyone.
Sir, it is 397.76 crores, sir.
Okay.
In point number 3, notes to account we have given, sir.
Yeah. Okay.
397.76.
So it is near to 400 crores. Yeah.
No, some of them has gone 50-50. 50-50. 50 P&L में चला गया, 50 accounts में चला.
Exactly. So entire money has not been taken into the P&L. It's a 50-50 ratio which is there. As regards to what will be the future in FY26 on this NARCL, so there are a lot of discussions within our NPA book which we are having with NARCL for shifting these accounts to NARCL. So this year also in FY26 we'll see good traction of accounts shifting into the NARCL and some booking coming under that also. So next point was with respect to the other income growth. Other income, as you rightly observed, that the major components of the other income for us have been with respect to the recovery in the return of accounts. Here we have improved the recovery on a YOY basis by 61%, from 1400 crore in FY24 to now 2300 in this year. And the other thing is from profit of sale of and revaluation of the investments. There the increase is more than 200%. From 628 it has gone up to 1800. So on the treasury front, Ajmera ji, we have at the time when the interest rates were high, we have taken a good book with us in the treasury. So now in this falling interest rate scenario, we are able to book profits out of that whenever we are selling. So this income is also accruing with respect to that. And return of account, again, we have a specific scheme now in the bank with respect to recovery and return of accounts, and the entire bank is working on under that OTS scheme with recovery of return of accounts. And we expect that more recoveries the same way that it has happened in FY25. Similarly, it will happen in FY26 for recovery and return of accounts. So as far as, let me just... So, no issue with that. See, Ajmera ji, at the present situation where there is so much global volatility and across the board issues, so we have decided that we will not be giving any guidance apart from the top line guidance which I have already given in my speech with respect to the global deposit and the global advances. All other guidance we are keeping at a pause at present till there is more clarity on the emerging situation which is happening. So nonetheless, I would only say on the recovery and return of accounts, whatever the number we have taken this year, 2300 crore plus we have done that kind of number we would like to maintain in this financial year also. So, as you are aware, being an analyst yourself, there is lot of pressure on the NIMs and margins of the bank. Not only for us, for the entire banking system. So, as a banker from the top management side who is sitting here in the bank from Bank of India, we are very clear that in this financial year, only those banks will do well in financial year 26 who do better non-interest income and who do better recoveries. Because margins will be under pressure as far as net interest income and net interest margins overall are concerned. So we have to concentrate as a strategy on non-interest income and also on the recoveries, not only in return of account but overall recoveries, so that the overall profitability of the bank improves in FY26. So as regards the business and technology part, you are right that technology we have invested a lot. Last year we had taken a budget of around 2,100 crores, out of which we have already spent up to 31st March 25 nearly 1,700 crores. 1,700 crores we have spent, and this year also we have taken a budget in for IT, digital and cyber security again of around 2,000 crores. If I tell you the numbers which are there, so our digital loan book now has touched at around 80,000 crores. That is another number which is now available with us. As on March 25, our digital book is around 80,000 crore, which is 12% of our global advances. In retail, it is at around 27,000 crores. In agri, it is 39,000 crore. This also includes the gold loans which we are sanctioning through the digital method. Only the pledge of gold happens in the physical way. MSME again, 13,000 crore of book we have already built up over there. And as regards the journeys which are there, 22 journeys were there in the last year which were digital, and in this financial year we have been able to have 29 journeys on the various journey side on the IT side which are now digital, which is there in part of the presentation also. I can just page number 39 it is there. Yeah. So if you see the presentation also, last year we had 22 journeys, this year we are having 29 journeys. And in liability side, there are 5 journeys which are digital. If you remove them, then 24 journeys are there in agriculture, retail and MSME. So in agriculture, we have 6 journeys which are digital. In retail, there are 10 journeys which are digital, and MSME, there are 8 journeys which are digital. All these kinds of automation and helping us in the bank in not only operational efficiency, but also reducing the cost and freeing the staff at the branch level from all these kind of mundane works which used to happen and which is now being taken care by the digital platforms which are there. And branches are now focusing more, number one, on marketing, for liability and loan products, number one, and number two, on the collection efficiency for recovering installment and other kinds of things. So we are very clear that the automation, whatever we are doing, leads to finally operational efficiency in the bank and finally more income to the bank. And one more data point that I would like to give you over here is with respect to our digital thing is that we have started earning income with respect to our transactions, banking and the debit mandates which we are taking from NBFCs and corporates and PSUs. Through that also in this financial year we have already earned more than 300 crores. So that is kind of income we have started getting through the automation which we have done in the last 2 years. So we are very much cognizant of the fact that whatever the investment that we are making in technology for IT and digital, we get back the returns outcome by way of business and finally the other income and the incomes which come for the P&L of the bank. Thank you.
Thank you very much, sir, and thank you very much, Ajmera ji. Can I have, yeah, please.
Yeah, hi sir, thanks a lot for the opportunity. Arjun from Baroda BNP Paribas Mutual Fund. So I actually wanted to check on the advances growth and guidance on that, but I do understand you are holding that back. But just on the corporate front, if you could share a little bit more on the pipeline that we have there and what is the nature of entities that are broadly looking for that, and maybe is it greenfield or brownfield or how exactly is that?
Yeah. So as far as the corporate credit growth is concerned, so overall global credit growth, we have already said that it will be around 12 to 13%. That is the guidance we are giving. So as regards the pipeline is concerned, we have a pipeline as on 31st March when we speak. The pipeline is at around 74,000 crore, which includes not only corporate but also RAM advances. So RAM advances pipeline is around 12,000 crores and international and corporate book it is around 62,000 crore. So this 74,000 crore constitutes around 11% of our total global loan book. So that is the kind of pipeline that we are having. And we are very confident this year we have grown at around 9%, 9.59% on a YOY basis in the corporate book. So in this financial year also, we are very much confident that we'll be able to grow in a double digit as far as the corporate book is concerned. So a lot of sectors we are funding, we are totally agnostic to any sector. If the promoter is good and if the entity is fine and the industry is doing fine, we are going and lending in that industry. However, I can say that there are a lot of emerging segments and sectors where we are lending, particularly with respect to data centers, with respect to warehousing facilities, with respect to solar PV modules, with respect to renewable energy also, and battery manufacturing also now we have started funding, and also EV vehicles. So these are the new emerging areas where we have started funding, apart from the traditional industry, which is steel, textile and all those kinds of things where normal expansions, brownfield projects are coming, and we are either we are the sole lender or we are part of the consortium or under multiple banking. So quite good traction now Bank of India is having through our large corporate branches. Apart from that, one more data point is that we have already opened emerging corporate branches which are now 20 in number, where again we are focusing on advances up to 250 crores. There also we are seeing lot of tractions and proposals have started coming, and margins are also better over there, but typically for the fact that the emerging corporates typically borrow on, because they are normally BBB rated, so we are lending them on MCLR rate, so the margins are better over there. Process fee also we are able to get better. LC/BG charges are also better over there. Forex income is also better over there. So there also we are targeting to focus on new emerging corporate clients who get added to the Bank of India portfolio. Thank you.
Well understood. Secondly, I just wanted to check, I think the MSME GNPAs have gone down from around some 10,000 to around 7,500. If you could share what has been driven by, what has been driving this improvement? Is there any regional or maybe sectoral color to this?
No, I couldn't understand the question. What was
the sectoral GNPAs for MSMEs?
Okay.
That has, I think, gone down from some 10,000 to 7,500, if my numbers are correct. So if there's any color to that.
Yeah, so sectoral GNPA in MSME, frankly speaking, it is a combination of two things. One is the advances which is growing in MSME book, because the denominator is growing, right? So we have grown our advances in the MSME book, number one. Number two, we have been able to curtail our SMAs in this book and the delinquencies which are there. So both the things together have contributed to the lower GNPA number in the MSME book. That is frankly the reason. Why? And lot of underwriting guardrails we have already placed in our MSME book, right from sourcing of the MSME account till the underwriting which happens, and till the monitoring which happens, and the collection efficiency for the term loans in MSME which happens. So we have underwriting centers, more than 150 underwriting centers in the bank for MSME advance, which we call the SMECCs underwriting centers, where credit officers are now placed. So credit underwriting has improved, number one. Number two, we are doing lot of DSA activities for MSME also through one of our subsidiaries, which is Bank of India shareholding. We have got the RBI approval. So that also marketing is happening through that, our own subsidiary. Third is the collection efficiency. For that, we have now put zonal collection centers in our 69 zones who take care of the collection efficiencies for these MSME term loans whenever they are getting due installments. So that also good traction we are seeing, so that the delinquency does not happen. So all these things together, the ring fencing that we have done on this MSME portfolio, we are seeing a good traction not only with respect to growth but also on the asset quality side.
So just lastly again on the asset quality front, there's been recently a judgment on this Bhushan Power and Steel account.
Correct.
With regards to that, how do we look at this NCLT and recoveries horizon changing? Would there be a material impact, and if so, how is the bank placed over there? If you could share a little bit.
So specifically on this account, if I can take for Bank of India, see, we had sold this account to a ARC. So there is no impact of this judgment per se on Bank of India balance sheet and PNL. So that is one clarification that I would like to give, number one. Number two, with respect to the judgment which has come, all the COC lenders which are there, we are not part of that, but I am told that all the lenders together are working on it, and they would be filing some review petition with the court.
Thank you very much.
Thank you so much, Ram.
I'd like to take Gauri. Can you just put in through Mr. Aditya Vikram? He has joined virtually. Okay. So there's a question coming up virtually. Can Mr. Aditya Vikram? Yeah. Kindly put him through. He is not audible.
And secondly, also, can you give the write-off numbers for this particular quarter?
Aditya, the first part was not audible. Can you please repeat?
So, sir, I see that sequential, this particular quarter,
Yeah, we can hear you, yes. Please go ahead.
So, thank you for taking my question, sir. The first part of the question was that the sequentially, credit cost has increased this particular quarter. Can you get some color as to why it has happened? Is it seasonal in nature?
Okay. So the first question is with respect to the credit cost. Yes, credit cost, if you see, if you see the year-on-year basis, see, our credit cost was 0.78 in March 24. It has come down to 0.76 in March 25. It has come down by 2 basis points. Yes, however, I agree that the credit cost has gone up on a quarterly basis, sequential quarter basis, and it has touched 0.84 crores. But overall, the credit cost has come down to 0.76% as on March 25. No, it is not linked to any season. Not been there. Both the credit cost and the slippage ratios would have been much, much better.
Thank you, Aditya. Thank you very much. Next in line virtually is Mr. Nitin S. Dharmawat. He has got a volley of questions. Nitin, I request you to restrict yourselves to only 2 questions, please. Gauri and team to put on Nitin Dharmawat from Aurum Capital. He is from Aurum Capital.
Yeah, thank you for the opportunity. Am I audible, sir?
Yeah, we can hear you. Please go ahead.
Thank you, sir. Congratulations on excellent set of numbers. My first question is, can you give the guidance? I mean, you said that you have to be balancing on top line, but just wanted to understand on return on assets, where do you see next year? So this still remains below 1%. So that's my first question.
Okay, that is on return on assets, right? So return on assets, if you see our numbers, our ROA was 0.70 in March 24, which has now improved to 0.90. right? And as far as the quarterly numbers on ROA is concerned, so we have touched the number of 0.98% in March 25 on the ROA side. So we wanted to touch 1%, we narrowly missed that number, but nonetheless, we are well in target to that. And if you see sequentially our ROA, it has been improving in the last 4 quarters. And in December it was 0.96, now touching at 0.98. Definitely within the top management side, we are targeting that we should touch the ROA of 1% as soon as possible and sustain it at that number in the ensuing quarters.
And what are the chances of recovery over here? Because last time we discussed about it and we mentioned that there is a possibility that this will not go into a default case. But nonetheless, it has not. So what are the chances of recovery over there?
Yeah, for this account, MTNLC, we are already NPA in this account like all other lenders in the system. And as regards the resolution is concerned, yes, a lot of senior level talks are going on with respect to this account on resolution of the asset, and we are expecting that in this financial year FY26 some resolution in MTNL will come. And as regards the provision, we have made adequate provision as per the RBI IRAC norms for the asset.
My next question about CASA percentage, it has gone down to 40% now. So what is the trajectory you see over here?
Yeah, as regards CASA is concerned, you have rightly observed that it has come down to 40% and we were at 43% in March 24. As you are aware that there is a lot of pressure on the resources and even more pressure on the CASA numbers. Nonetheless, we have been able to increase our CASA by nearly 10,000 crores on a YOY basis. And as regards from the top management side, I can only say that we are very cognizant of the fact that we need to have a healthy CASA number, and we would like to protect our CASA percentage at around 40% in FY26 also. And if you see our breakup slide on the domestic deposit, our bulk deposit is only 13.82%, which is less than 14%, which means that 86% of our domestic deposits either are CASA or are retail term deposits. So we would like to continue to maintain this number in this financial year also, so that we are able to get deposits at a lower rate and reduce the cost of deposit, thus protect our net interest income and net interest margins in FY26.
The corporate growth loan, which continues to be lower, you mentioned about MSMEs where we are bringing now. So what is the reason, what is the reason why it is lower? Do we see risk of NPAs and that is why we are not putting that sector aggressively, or there is a risk to go down, or lower requirements of funds by the corporates? Can you elaborate that?
So CASA, if you see our credit number and slide, you have rightly observed that the growth is on a lower side compared to RAM advances, retail, agriculture and MSME, which are growing in double digit, and this one is growing at around single digit at 9.6, 9.7. So, but we have very consciously trying to pace our corporate advances for the simple reason that all AAA and AA rated advances are asking for EBLR rates, which are external benchmarked, where the yields are very less. And we want to build portfolio under this MCLR kind of lending in corporate book, where the yields are better and margins are better. So it's a conscious decision from us not to build that book to a large extent, so that we protect our margins, because AAA and AA rated corporates are giving very fine rates, and that too at the EBLR linked rates.
Thank you, Nitin. Can we have some? Yes, kindly continue.
Hi team, good evening. Ashlesh here from Kotak Securities. First question is, sir, on the margin front, your yield on loans reported number has declined by some 28 basis points QOQ. Can you explain what is the reason? Because we have not seen such a sharp decline in any of the peer PSU banks.
Yeah, with respect to the, you are asking about the NIMs?
Yield on loans.
Yield on advances, correct. See, yield on advances, if you see on a YOY basis, they have improved. See, in FY24, our yield on advances were 8.38 to be exact. It has improved to 8.46 in March 25. So it has improved by nearly, I would say, around 8 basis point. But you are right that if you see on the quarter basis, sequentially it has come down from 8.55% in December 24 to 8.27 in March 25. The simple reason for that is again because of the fact that from February onwards the repo cut happened. You are aware, and in this Q4 itself, immediately after the repo cut, our book, which is nearly 50% of our book, which is external benchmarked against the repo, immediately on the next day, the 25 basis cut came for our book. So 2 months, the interest income went down by 25 basis points straight away. So that is a simple reason why the yield on advances came down in Q4. However, in overall during the year, we were able to protect it and we were able to be at around 8.46. Another data point that I would like to give you over here is our weighted average lending rate for the whole year was 9.74%. And our weighted average term deposit rate, the term deposit that we have taken during the year, was at 7.09%. So if you see the difference between the two, the difference is around 2.65%. So that's a healthy difference we are trying to maintain, and this does not include CASA, cost of deposit. This is only term deposit weighted average cost. So there again, as I said, that by taking more of retail term deposits, we are trying to maintain the cost of deposit at a lower side, so that we are able to protect our margins, the net interest income and the NIM in the ensuing quarters.
Sir, a follow-up on the yield question. Even if we account for this 25 basis points rate cut on 50% of the loan book, that can only explain about 8-9 basis points of decline. But the decline which you have reported is some 28 basis points. So
correct.
It seems like there might be a few other variables also.
Yeah, the variables in the sense that, see, 50-55% of the book is the EBLR, right? So the outstanding, that percentage we are seeing basis the outstanding as on 31st March 25, the chart we have prepared. But majority of the period, the outstanding loans were there in the external book only and not in the MCLR book. So MCLR book in this quarter, we had in the Q4 of this financial year, we had been able to grow in the month of March only, where the interest income accrued. So majority of the interest income in the loan book was coming from the external benchmark rates only. So where the cut happened actually.
Okay. Sir, secondly, can you just explain again the accounting of the SR evaluation which you have done? You said 50-50%, but why would the entire revaluation not go under treasury? Why would it not go under treasury entirely?
Yeah.
Just explain the accounting, please.
So Kumar, would you able to explain this one? Why we have taken it as 50-50% NARCL?
Accounting entry.
Accounting entry, how we have done? Take a mic, please.
Yeah, 1 to 1 he is saying.
You want to take 1 to 1? Okay. Theek.
Sir, just lastly, can you elaborate on the status of a few state government accounts which were under SMA last quarter? I believe they were from Telangana.
Yeah. So if you see our SMA slide again, those SMA accounts are still there of that state government. There are 4 accounts in that which are there. The slide number is there with us.
For 24.
Yeah. So here if you see the number is 5,599 crores. Our corporate SMA which is there total, which constitute 4 state government accounts, and either they are in SMA 1 or SMA 0. So none of them is SMA 2 also as on 31st March, and we are very confident that they would not slip, and this is the assurance which have been given to us by the corporations. Number 2, all of them are secured loans. And another additional point is that all the 4 accounts which are there of that state government, they are state government guaranteed. So we do not foresee any delinquency coming in those accounts, though they are having some cash flows issues and they are under SMA, but we don't foresee any delinquencies coming there.
Thank you, sir.
Thank you very much. Mr. Ashok Shah and Bhavik Shah are they online, Gauri and team? Yeah, kindly put them through, any one of them. Yes, Mr. Ashok Shah, are you able to hear us? or Mr. Bhavik Shah, whoever is available. Till the time they join, I'll ask one question which has come from one analyst from UTI MF, sir. He has congratulated you for the good results. His question is that a bank has booked 1800 crore plus from sale of securities. What is the estimate for current year and what is the plan to protect portfolio yield?
So I think, who is this gentleman? From UTI?
The gentleman has not given his name,
Okay,
sir, but he's from UTI MF.
So basically this treasury profit is dependent on the market condition, which prevails at during that point of time. So yes, our endeavor will be to take advantage of the market and book the profit. I think it's very difficult to give any guidance on the treasury profit because it is totally dependent on the market condition.
Yes.
Yeah, thank you.
Thank you very much, sir. Yes, if Ashok Shah or Mr. Bhavik Shah is there, we'll take them. Otherwise, we'll let any of the analysts present here. Sir, yes, you are quite silent today, sir. Yeah, please. Sir, just a second, it's coming online. Yes, they are waiting since long, yeah.
आप ले लीजिए चौकसी जी नहीं बट दे आर नॉट एबल टू
ले लो तब तक
हाँ सर आप ले लीजिए वो जुड़ जाएंगे हमारे साथ
Congratulations to Team Bank of India for a very stable numbers. So I understand you may not give any guidance on various parameters led by ROA, ROE, everything. It's fine. You may give when country stabilizes and the market stabilizes. Now, all the challenges which you have taken on in last 12, 24 months by rolling out products, technology, adoption of new practices, needs a lot of challenges where human resources concerned. Now, what have we done in the bank that emerges as a winner to adopt all the new technologies and new products that they show the profitability path and the gains fructified from all the initiatives?
Yeah. So we have done a lot of things as far as the PPT is concerned with respect to the process, people and the technology. So a lot of enablement and enablers have been done within the bank with respect of lot of processes where we have lot of processes we have tweaked and streamlined to make it business easy not only for the customers but also for doing the business at the branch level for the staff also. That is the first part. Second part is with respect to the people, we have done a lot of reskilling and upskilling of the staff, given them lot of trainings and other kinds of things. And we have also tried to now post them at the right person at the right place so that the entire productivity we are able to capture as far as the business is concerned from the people side of it. Technology, as I already said that we have invested a lot of money in technology from the last 2-3 years. Nearly 2,000 crore we are investing every year. And out of which we are spending nearly 80 to 85% of that technology part. So it is going not only for IT, hardware and software, but also going for digital and also going for the cyber security part, for even giving cyber protection and other kinds of protection to the customers when they, in case they are our liability partners also. So that is one part. Other thing is that now that we have established all that thing, so the 3 segmentation of our verticals, whether it is the business vertical, the support vertical and control vertical, we have all made them business centers. That is another thing which has been done. To just give you an example, our audit department, which takes care of the audit of the branches, they have now also been given a task of finding the revenue leakage at the branch levels. Small charges which are not debited in the accounts, loan accounts and other kinds of things. So this year we have been able to recover nearly 200 crores through our audit department through revenue leakages which happen in normal course of business. So this kind of 200 crore has directly gone into the P&L of the bank. So this is another thing, and how we did that was very simple, that we gave more staff to the audit department. They had more resources available with them so that they had more manpower available with them when they were doing audit in the branches. So they were able to find those kinds of things. Another small thing on the technology part, just an example I would give, through transaction banking and direct debits, mandates which we are taking from the corporates and also from NBFCs of their collection. So there also we have started getting charges collections. This year we have been able to earn nearly 300 crores from such kind of activity. So this is another kind of income we have built up for the bank, and we want to scale it up now in this financial year in FY26. So with all these kinds of things, and with, as I said, that all the business verticals, support and control verticals being in a way business centers for us, so everyone is now contributing, not only either way by way of profitability through income or by way of reducing the cost through controllable cost. So both the sides it's happening, which is helping us improve not only the interest income but also the other income. And on the third side, the third dimension being the controlling the cost also, which is overall helping us improve the profitability of the bank, which is why, which you see in this balance sheet, we have been able to give a operational profit which is on a YOY basis, it is jumped by 17%, which is a very healthy number in this market. And net profit, we are touching a 9,000 crore of figure with a jump of YOY nearly 45%.
Sir, all your answers are well accepted. Entire plan which you have rolled out is supporting your operational numbers. Now, the balance sheet may grow, profit will grow. The human resource incentive, whether it's top management or the executives and the lower, if they work in tandem, it may grow at a higher number.
Correct.
So what is that aspirational side of where the bank is concerned?
Correct. So see, we have a very structured now in the system, being a public sector bank, a PLI scheme, which is a performance linked incentive. So there are now 2 PLI schemes going on in the system, which is PLI 1 and PLI 2. Under PLI 1, it is for staff which is up to scale 3. That is based on the operational profit and up to 15 days of salary they get. So this year we have got 17% of operational profit, which means that 15 day of the salary they will get as a PLI up to scale 3 staff, means officers up to scale 3, clerical staff and the sub staff which is there. So that they will be getting. We have provided that number in this balance sheet. The other part is that DFS has already come out with a PLI 2 scheme, which is for scale 4 and above, up to the level of MD CEO. Scale 4 and up to MD are mapped under that same structure, same scheme. There also, once the numbers are approved and everything is finalized by the DFS, that PLI will also be getting. So both the things together, we have already provided for in the balance sheet. In the PNL, you can see in the staff expenses, because of which it has risen also. So that kind of provision already we have taken, and that kind of incentive will be coming to the staff. As you said that we should take care of the staff, that we have already provided.
Sir, in view of the global trade related situation earlier, then April has been a smart recovery where stock market was concerned. Now we are coming up with a new internal issues where India is concerned. This may lead to a smart CASA balances emerging in May with the stress which is visible, what is going to happen, whether it's a 24-hour event or a 2-week event, we are not aware. This may lead to a lot of CASA growth because people may stop consumption for some time. How we will take some initiatives where we garner higher CASA numbers or deposits to get a better market share?
Yeah, as you rightly said, you have observed rightly. Yes, see, in the COVID time also, when the COVID struck, everyone thought, even the bankers thought, where we will get the deposit and how we will get the deposit, because COVID is there, lockdown is there. In fact, it worked to the contrary. The CASA balances of the banking system just shot up in FY21 and the early part of FY22 in 1 or 2 quarters, because of the fact that everyone started keeping their money in saving and current account for any kind of emergency, and the CASA shot up in the system. So similarly, in this kind of situation, war-like situation, everyone will keep their balances with them, and as you rightly said, the CASA will shoot up. We have done a lot of enablers within the system. Now, if I can tell you that now we have additional one more GM in our resources department. So now our resources department, which is the liability department, is headed by a CGM, and now we have 3 general managers sitting over there. One GM is taking care of the entire CASA piece. One general manager is taking care of the entire government business, which includes the central government, state government and the PSU business. With respect to CASA, and term deposits, and also the salary accounts which have to be done. And the third general manager in the resource department is our CEBB department, which is the customer excellence and branch banking. So there we are taking care of the customer service at the branch level and how better customer service can be given to the customers, particularly for the saving and current account holders. So if we are able to take care of this piece where we are able to give better customer service and we become a differentiator among all other banks in giving better customer service and personalized customer service, there is no reason why the CASA balances of our bank will not improve.
Sir, having known Bank of India presence well accepted in the trade community in the western states led by Mumbai, the touch point was very high. Then we went down for various reasons 10, 12 years back. We are showing a sign of recovery. Bank of India Stock Exchange branch was very popular in early days. Cross-selling was very well accepted for various, those time products were not existing. But now today's world, every customer is looking for cross-sell.
Correct.
They want facilities and they want support. Somebody may bank with HDFC, but Bank of India has forgotten for various aspects. How are we re-emerging on those areas which Bank of India used to champion about?
So as you rightly said, we have been doing lot of activities as far as the product per customer is concerned. So we are very much at the top management side, whichever is our GMs, CGMs, whole-time directors who are sitting in this room. We are very clear that we need to improve product per customer. That we are very clear. So our product per customer, if I share with you the number, it has increased by 46 basis points in the last 2 years. Through sale of various kinds of products that we are doing, not only through the physical banking which is happening, but also through the digital banking of mobile and internet banking. And now that we have our own subsidiaries with respect to mutual fund and also SUD Life, which is selling insurance products. So a lot of now traction is happening, and our marketing officers at each of the zonal office and the FGM office are now clearly focused, and RMs are also there, and we are selling lot of products, whether it is demat account, whether it is mutual fund, whether it is the NPS scheme, all kinds of products we are selling to our customers, and the product per customer has now started increasing. And with this engagement with the customer, we are now clearly able to see there are more balances in the saving accounts. And already, as I was telling earlier in the press meet also, that we have 1,000 now HNI branches also designated, where we have taken a HNI customer as a customer which has an average quarterly balance of 5 lakhs, and we have given a RM to them. So that kind of thing is there. So all these things are combining together and helping us improve our CASA balances, and it has grown last year, as I said, by nearly 10,000 crore on a YOY basis at a time which was very challenging for the entire banking industry. If you see numbers of some of the banks, the CASA has in fact degrown in some of the bank in absolute numbers. But for us, we have grown our CASA by nearly 10,000 crore on a YOY basis.
I wish that your 10,000 is at least 25,000 this year. And
Thank you.
Hope all your initiatives support. But one recommendation, that rather than only focusing for income, Bank of India led entity products, if all other products are sold, the customer may not bank at 2-3 places and may bank with Bank of India.
Correct.
Thank you for answering all my questions, and good luck for the year.
Thank you.
Thank you very much, sir. Thank you very much, Choksi ji. Sir, there are a good number of questions coming up on WhatsApp, but most of them are answered by you at one point or the other, so I am not taking it. Gauri and team, to let them know that those are answered. Only 2 questions. One by Vinay, an independent analyst. SMA 1 bucket for corporate loan is rupees 3357 crore. Has this been recovered since then? Has anything moved to NPA as of now?
Yeah, so as regards the SMA numbers are concerned, in the SMA book, it is 4,599 crores total number, out of which in the SMA 1 book, it is 3,357 crore, and it constitutes the 4 accounts which are of state PSUs only. None of them has become NPA, and as on date when we speak, they continue to be in the SMA category at SMA 0 or SMA 1.
Thank you, sir.
Yeah.
Another one coming up from Mr. Jay. He is also an independent analyst. His question is that there seems some mismatch on specific provisions. Is there any contingent or non-specific provisions in rupees 13.47 billion? Yields on advance Why such sharp dip of 28 basis points quarter on quarter? And third is riskiness of corporate SMA 012 book.
Okay, on the SMA book, if I can continue with that, as I said in my earlier question also, while answering the question, that all these SMA numbers of this state PSU are all secured advances, number one, and number two, all of them are covered through a state government guarantee, and as I clarified earlier, none of them we foresee in this financial year to be slipping or becoming delinquent. That is as far as the SMA number is concerned. As regards the number which is on the NIM side, yield on advances side.
Yeah, why such a sharp dip of 28 basis points?
Yeah, so that has already been responded by me. Yeah.
And mismatch on specific provisions. Is there any contingent or non-specific provisions in rupees 13.47?
So I think we'll be responding to that separately on a one-to-one basis.
All right, sir. If Mr. Bhavik Shah and Ashok Shah are there, we'll take them. Otherwise, one last question from the analyst, if anybody else is there. Yeah. Ajmera ji, you want to say something? Can someone pass on the mic for him, please?
Yeah. This gentleman, we can have one-to-one also.
Who?
उनको दे देते हैं ना opportunity. That, this.
So, sir, just again on the composition of corporate and retail, we have come from 55.45 corporate in 31st March 24 to now 58.42, I mean retail, 58.42. So combination now is 58.42.
Correct.
As against 55. So going forward, because we are one bank which is still having a good corporate presence.
Correct.
So, and looking at the scenario when there is so much of competition, everybody is running for RAM, for retail, and there is a lot of competition. So, are we open to look at increasing our, you said it will be touching 10% or double digit, but really by focusing without thinking of the percentage, like even goes up, are we open for that to increase our corporate book with of course good rated accounts and this thing, or we are just close to bring it to 40-60 or 35-65 like others?
No, this ratio is just a benchmark number. So internally we have kept that RAM should be at around 58 and the corporate should be at around 42. But we are totally open while we are doing corporate advances. If the yields are good, corporate is good, and we are able to get good profit out of that account and good income out of that account, we are totally open to funding that corporate. We have no issues with that. So when we are saying that we'll have a credit growth of, a global credit growth of around 12 to 13% in this financial year, obviously we have to grow credit. So we have to even take care of the repayments which will be happening in this financial year. So if you see our book, nearly 45% of our books are term loan also, in which there will be repayments. So when the repayments are there, we not only have to take care of the incremental growth in credit, but also the payments which will come in the term loans. So we are totally open to corporates. Wherever the opportunity is there, where margins are good, we will be funding the corporates.
And why I am more specific about it is that because of the change of the definition of MSME.
Yes.
Many of the corporates have come down into some mid-corporates in the MSME, which goes in your
Correct.
other than corporate percentage. So, more efforts are required there to recoup even that loss of, I mean, not loss of business, but going to the other category.
Yes.
So that is why.
No, we are totally open to the building of that corporate book. You can get that thing that already we have opened 20 emerging corporate credit branches. That is for that specific reason only we have started those branches, to have a portfolio in Bank of India with respect to mid-corporate or emerging corporate customers who can be future corporates. So there we clearly see that there are good margins for the bank, and we can go for sole banking and earn the entire income for ourselves by having their the promoters saving accounts, CASA accounts, and even the employees accounts, everything. So lot of opportunities of third-party selling and cross-selling is available with such kind of emerging corporates, and it is definitely part of our strategy.
And just last passing, sort of a point of information that based on this Supreme Court recent judgment on Bhushan, I mean, what is our status and what is our quantum which we had recovered, and what are your views on that going forward?
I have already, I think, answered this question. See, our Bhushan, we had the exposure in this account, and Bank of India had sold this account to a ARC. So we are not at all impacted by this judgment because it's already sold with no recourse basis. So we have nothing to say on this. Yeah, but what I understand from the industry and the system is that banks are under COC meeting will be held shortly. Whoever is the COC members, and they may be going for some petition.
Sir, this is one last question from the virtual world also. It is from SBI Mutual Fund. The name is not being displayed. The question, first of all, he has congratulated you on the good set of numbers. And the question is that is the bank having an offshore branch in Gift City? What is bank's plan for relative growth of Gift City branch vis-a-vis other overseas branches? And how active is bank in terms of non-deliverable products permitted by RBI to entities operating in offshore locations?
Yeah, so we are very much having a Gift City IBU branch. And if you see our presentation on page number 41, our IBU branch is having a advanced composition of nearly 8% of our global advance book. So it's a very significant number, and it is the 4th largest branch for us in the international operations. So a lot of advances we are giving mostly to the Indian corporates through our IBU Gift City branch, and a lot of other cross-functional products also we are now looking at from our IBU Gifts branch, which now IFSCA is now approving for either for insurance or for mutual fund and other kind of things. So a lot of traction we are having for our IBU Gift City branch.
Thank you very much, sir. Due to time constraint, we are not able to take further questions either from the virtual world or from here. I think nobody is here. Thank you very much, gentlemen, for joining us this evening and for this enlightening session. Refreshments are outside. Kindly join them. And the press release will be shared to you shortly by our Ad Factor team. Thank you all. Thank you very much and good day.
Thank you. Thank you. Thank you, sir. अरे वो लेके आए हैं क्या? थैंक यू.